The Pi network launched with a bold promise, a vision of democratizing cryptocurrency mining. It aimed to break down the barriers to entry, making digital currency accessible to the masses, not just those with technical expertise or expensive equipment. The core concept was ingenious, making crypto mining accessible to anyone with a smartphone, transforming a ubiquitous device into a potential source of digital wealth. This approach was a stark contrast to traditional mining methods. Millions joined the Pi network, drawn by the ease of use and the allure of passive income. They engaged daily, tapping a button within the app to accumulate Pi tokens, a simple action with the potential for significant future reward. Each tap represented a stake in the future, a belief in the project's potential, with all hoping for future wealth and financial freedom through their accumulated Pi. The dream of turning a small daily action into a substantial asset fueled the network's rapid growth. The project quickly built one of the largest communities in crypto, a testament to its user-friendly approach and compelling vision. This vast network of users became a powerful force, united by a shared goal. This global community was united by the dream that their tokens would one day have real value, transforming their daily taps into tangible assets. The promise of future utility and exchange value was the glue that held the community together. Pi's appeal was its simplicity, a key factor in its widespread adoption. The intuitive interface and straightforward mining process made it accessible to individuals with no prior crypto experience. Unlike traditional cryptocurrency mining, Pi required no expensive hardware, no specialized knowledge, and no high electricity bills. It offered a low-barrier entry point to the world of digital currency. All that was needed was just a phone and a vision, a belief in the potential of Pi and the future of decentralized finance. This simplicity resonated with a global audience eager to participate in the crypto revolution. This viral growth created a sense of ownership and excitement, with social media buzzing about Pi's potential price and future applications. The community actively promoted the project, further fueling its expansion. But the journey from app to open mainnet, the point at which Pi tokens become truly tradable and usable, has been slow and fraught with challenges. The development process has taken longer than many initially anticipated. These repeated delays in launching the mainnet have been testing the community's patience, leading to frustration and uncertainty among some users. The extended wait has raised questions about the project's timeline and long-term viability. Despite years of anticipation and daily engagement, Pi tokens remain locked within the Pi network ecosystem, inaccessible for external trading or use. This restriction has created a unique dynamic within the Pi community. Currently, Pi tokens are essentially IOUs with no official trading value on established cryptocurrency exchanges. Their worth is based solely on the potential for future listing and usability. Despite the lack of an official mainnet launch, some exchanges, driven by market demand and speculation, began listing Pi IOUs or pre-market tokens. This allowed for speculation and price discovery, creating a volatile market for Pi, even though most holders couldn't actually sell their mined tokens. The trading activity was largely based on anticipation and future expectations. These unofficial listings fueled excitement and generated significant buzz around the Pi network, attracting even more attention to the project. The limited availability of Pi IOUs on these exchanges led to prices soaring as people bought into the dream of future wealth and widespread adoption. The price surge reflected the strong belief in Pi's potential. Yet, this early trading, while exciting, set a speculative price for a token that was still out of reach for most Pi network users, creating a disconnect between perceived value and actual accessibility. The anticipation of a future official listing on major cryptocurrency exchanges became the main driver of Pi's perceived worth, overshadowing its current limitations. The potential for widespread trading and liquidity fueled the hype. Now, as the wait for the open mainnet drags on, hope and risk are both at all-time highs, creating a tense atmosphere within the Pi community. The potential rewards are significant, but so are the risks of further delays or even project failure. The stage is set for dramatic price action, either a massive surge upon mainnet launch or a significant correction if the project fails to deliver on its promises. The market is bracing for a potentially volatile period, but the reality behind the hype, the challenges of building a truly decentralized and scalable cryptocurrency, is starting to show, casting a shadow of doubt on Pi's long-term prospects. The Pi network's promise of accessible cryptocurrency mining is facing its toughest test yet, as it navigates the complexities of blockchain development and the pressures of a demanding community. the future of Pi hangs in the balance. The initial excitement surrounding the Pi network's IOU listings on various exchanges has noticeably faded. The anticipation that once fueled a surge of interest has begun to wane, leaving investors and community members alike in a state of cautious observation. This initial euphoria has been replaced by a sharp and concerning price decline. The market's response has been swift and unforgiving, reflecting a shift in sentiment. After peaking on pure speculation and fueled by early adopter enthusiasm, Pi's price has dropped steadily and consistently, painting a clear picture of a downtrend that is hard to ignore. This decline is now testing the resolve and commitment of its community, forcing many to re-evaluate their positions and expectations. The token now hovers precariously around 43 cents, a crucial support level that could determine its short-term trajectory. In markets, support levels act as psychological floors, representing areas where buyers are expected to defend against further price declines. These levels indicate where buyers have historically stepped in to purchase the asset, preventing further downward movement. For Pi, this level is now the battleground between hope, the hope that it can hold its value, and fear, the fear of further losses, and a potential collapse in value. Persistent selling pressure has steadily eroded confidence among investors, with each attempted rally quickly met by even more selling, suggesting a lack of sustained buying interest. The initial dream of high valuations and substantial returns is now clashing head-on with the harsh reality of a plunging IOU price, forcing a critical reassessment of its true worth. The market is sending a clear signal that community size and enthusiasm alone cannot sustain value indefinitely. Sustainable value requires real-world utility, tangible applications, and the establishment of open trading markets. If this crucial support level fails to hold, it could trigger a cascade of selling, potentially leading to a rapid and significant price drop. Such a breakdown could further damage investor morale and erode the overall sentiment surrounding the Pi network. The Pi community is watching closely and with bated breath, knowing that the next move, whether it's a bounce or a breakdown, could very well define the project's future trajectory and long-term viability. The pressure is now squarely on Pi to demonstrate that it's more than just hype, and that it can deliver real value to its users and the broader cryptocurrency ecosystem. The 43.71 cent level isn't just a number, it's Pi's last line of defense. Historically, this support has sparked rebounds, but now it's under siege. If buyers can defend it, Pi could stabilize and even recover, but a decisive break would unleash a wave of automated selling, accelerating the decline. For millions of Pi miners, this level represents hope. Its failure could shatter confidence. In crypto, sentiment drives action. A broken support can quickly turn hope into panic. The battle here is about more than price. It's about belief in Pi's future. A strong hold could attract bargain hunters, but a breakdown could start a painful new chapter. The market is testing whether Pi's story still inspires faith or if doubt will take over. The outcome at this level will set the tone for what comes next. As Pi's price navigates the choppy waters of the crypto market, a troubling trend is emerging, casting a shadow of uncertainty over its immediate future. We're observing a noticeable uptick in the movement of Pi tokens into centralized exchange wallets. This isn't just a trickle, it's becoming a more pronounced flow. This shift signals a growing sentiment among holders that they are preparing to sell, potentially capitalizing on current price levels or mitigating against anticipated future declines. The motivation seems clear: prepare for a sell-off. This is especially concerning with a major token unlock event rapidly approaching on the horizon. The timing is critical, and the market is watching closely. Historically, moving tokens to exchanges is a classic sign of impending selling pressure. It suggests that holders are positioning themselves to take advantage of liquidity and execute sales quickly. It appears that early investors, who acquired tokens at lower prices, and large holders, who possess significant quantities of Pi, seem ready to cash out and realize their profits. They are poised to act as soon as the unlock restrictions lift, freeing up their tokens for trading and sale. The end of the vesting period is a key date. This noticeable surge in exchange balances is undeniably a bearish signal, flashing warning signs to the broader market. It suggests a potential downturn. All indicators are suggesting that a substantial flood of new supply is imminent, about to enter the market and potentially dilute the existing value. When a large number of tokens hit the market all at once, the dynamics of supply and demand shift dramatically. Consequently, prices can fall rapidly and significantly, as sellers overwhelm buyers, creating a downward spiral. The timing of this activity, occurring right before the unlock, clearly shows this is a calculated move, a deliberate strategy, and not merely a random coincidence. The underlying fear of a potential price drop is driving holders to act preemptively, seeking to protect their investments. This action, in turn, ironically increases the risk of that very price drop they are trying to avoid, creating a self-fulfilling prophecy. Therefore, the market is bracing for impact, anticipating a period of heightened volatility and potential price swings. The swelling exchange wallets are acting as a reservoir of potential sell orders, a massive supply waiting to be unleashed. This creates a feedback loop of fear and selling, which could intensify the coming volatility and exacerbate any downward pressure on the price. In conclusion, the stage is set for a major test of PI's price resilience, a critical moment that will determine its short-term trajectory. A token unlock releases previously restricted tokens into the market, often held by early backers at little or no cost. This sudden supply surge, without matching demand, puts heavy downward pressure on price. For PI, years of mining mean a huge backlog of tokens ready to hit the market. Even a phased unlock will create a supply shock, as many holders are eager to sell for any profit. The looming unlock is fueling anxiety, with traders moving tokens to exchanges in anticipation. The market expects a wave of selling from holders with zero cost basis, making a price drop likely. Until this new supply is absorbed, PI faces a bearish outlook. Technical analysis is sounding alarms for PI. The MACD indicator shows strong bearish momentum, with the MACD line below the signal line and the histogram deep in negative territory. The RSI is also trending down, well below 50, confirming that sellers dominate the market. No bullish divergences are in sight, just a clear accelerating downtrend. These indicators reflect market psychology. Right now, fear and selling rule. For traders, this is a warning. Trying to buy now is risky, like catching a falling knife. Both MACD and RSI point to further downside unless momentum shifts. Until technicals improve, the outlook remains negative. The charts echo the fundamental risks, reinforcing the bearish narrative. PI's price action is a cautionary tale for speculators. If PI's key support at 43 cents fails, the price could plunge much lower. A breakdown would trigger stop losses and attract more short sellers, accelerating the fall. The next support zones are far below, possibly near 30 or even 25 cents. Such a drop would devastate holder morale and validate critics' warnings about PI's speculative nature. Negative sentiment could spiral, deterring new users and weakening the community. A falling price and sour narrative are a tough combination to recover from. The market would be forced to confront whether PI's early hype was just a bubble. Despite the gloom, a bullish reversal is possible. The biggest catalyst would be a clear, imminent open mainnet launch, turning IOUs into real tradable tokens. A strong bounce from support, especially on high volume, could also spark a short squeeze and restore confidence. Major partnerships or real-world use cases would give PI tangible value beyond speculation. News of developer activity or ecosystem growth could shift sentiment. Even a broader crypto market rally could lift PI, as rising tides often boost all boats. Any of these could help PI find a bottom and start recovering. The next move depends on both news and market action. PI stands at a crossroads, teetering on its last major support. The coming days will be crucial. Watch the price action at 43 cents closely. A break below on high volume signals more downside. A strong bounce could mark a turning point. Monitor official updates from the PI core team. News on the mainnet launch could change everything. Silence or delays will likely worsen the sell-off. Track on-chain data. If tokens stop flowing to exchanges, selling pressure may ease. A reversal in exchange balances would be a subtle bullish sign. The interplay of price, news, and token flows will decide PI's fate. Stay alert. This is a make-or-break moment for the PI